Hey, it's Solomon with the Mortgage Hub here, and one of the most common questions I get from self-employed borrowers is, do I need to show proof of 2 years or 1 year of self-employment to be able to get qualified for a mortgage? And the answer there is it depends on what type of program we're using. So if we're using a conventional loan, generally speaking, you need 2 years of tax returns. Okay, so that's 2 years of personal or business returns. There is an option to use, the guideline does allow for a 1 year option, so showing 1 year of personal or business tax returns. But we have to prove that you have been self-employed for 5+ years, or you've owned that business for 5+ years. There are some other exceptions to that, is if you're going from a W-2 position in the same industry, for example, to being self-employed. If we can show that and prove that, then we can use 1 year filed tax return as a self-employed person to qualify in a conventional loan. So those are pretty standard guidelines on the conventional side. If we're not talking about a non-QM loan or an alternative documentation loan, whether it's 1099 or business bank statements, it's more flexible, right? You have to show that you've been self-employed for 2+ years, okay? Then that you can do that a couple different ways, but for example, CPA letter would be one. There's some other ways that we can show proof of that, but generally speaking, if we show proof that you've been self-employed for 2+ years, you can use a 1 year business bank statement program as an alternative option. And I have a video that goes into detail in terms of how that's calculated, which is linked here in the description. But it does give you more flexibility, right, on the non-QM side, on the alternative documentation route, as a self-employed borrower. The trade-off there is going to be, on the non-QM or alternative documentation side, you're gonna have a slightly higher rate. Typically, I would say somewhere between 1/8, 1/4, sometimes slightly higher depending on credit score. You are going to have some restrictions or some tougher guidelines as far as the minimum credit score requirements, where it's typically 660 on credit score. On a conventional side, you can go all the way down to 620, for example. And also the down payment on a non-QM is going to be higher than required on a conventional side. So on the non-QM side, you're talking about 10% typically as the minimum. And on the conventional side, you can go 5% or 3% even if you're a first-time home buyer. So lower down payment option, lower rates, typically by at least slightly on the conventional side, slightly higher rates on the non-QM side, slightly higher down payment requirements, definitely higher reserve requirements on the non-QM side. But more flexibility as far as how to calculate the income, how long we need to prove that you've been self-employed, etc. So I think one of the main things to consider, what I always talk to clients about is, when you're planning on buying a home or getting a mortgage, talk to your CPA, talk to your lender, broker, banker, whoever, and talk about these options and really kind of make sure that you're set up correctly, right? And that you're planning for this. So bottom line, conventional side, just to recap your conventional side, typically 2 years, can get sometimes, depending on the scenario, 1 year of tax returns. Non-QM side or alternative side, more flexible, 1 year, only need to prove 2 years, okay? But you don't have to show documentation for 2 years as far as the income flow. And the other thing I would say is, talk to your lender, talk to your CPA before you are planning on getting a mortgage. 6 months out, a year out, 2 years out. Take your time planning this so you know what options are available. If you want to talk about this with me, you can reach me at 562-484-1907, and we'll take a look at your scenario. Okay? Happy to help. Talk to you soon.